Dear all, welcome to Financial Rapo channel. I found a very interesting video. Let's watch together and react to it. From Wall Street Millennial channel, and it's about how a rock trader cost a French bank 7 billion. A really, really interesting video. I mean, it's funny as well as very unfortunate at the same time. Let's watch.
On this channel, we've seen many instances of rogue traders engaging in illegal behavior, racking up tens or even hundreds of millions of dollars of losses for other market participants. Sometimes these rogue traders are institutions themselves. Other times, they're just individuals who think they have found the key to the market.
Institutions themselves are rock traders. It's a new to me. Okay.
But almost no one comes close to the case of Jerome Kerviel, the famous French trader who made thousands of unauthorized trades for his employer. They say that he placed nearly $70 billion in trades on the company's accounts.
What? 70 billion?
Going unnoticed until he had racked up losses of about $7 billion.
Almost 10% loss. 70 billion? How did he even got the authority to trade with such a humongous money? Let's see.
But by then it was too late, and his employer, one of Europe's biggest banks, had to write off the unauthorized trades as pure losses. In this video, we'll go over the career of Jerome Kerviel and how he tricked a prestigious French investment bank into letting him lose almost $7 billion of their money.
They always trick. Otherwise, they can't be rogue. Okay.
Jerome Kerviel was born and raised in a working-class family in France. He went to college at the University of Nantes, studying finance, and then went on to earn a master's degree in back-office finance. He was a mediocre student, not especially strong, but not weak either. After graduating from his master's program, Kerviel started to work at France's second-largest bank, Société Générale, or SocGen for short. SocGen is the French equivalent of JP Morgan or Bank of America, providing all...
Yes, it explains JPM or BOA. Yeah, it explains. Otherwise, this much money. Okay.
sorts of retail and investment banking services. At the time, it was the second largest bank in France and remains one of the most significant investment banks in the world. Among other things, it engages in retail banking, private banking, asset management, and securities trading. When Jerome Kerviel joined SocGen in 2000, he was assigned to a middle office job doing compliance work. He was in charge of helping with tasks such as verifying trades and
2000 means around .com bubble.
making sure all the activities of the bank's front office traders were in accordance with government and company rules. Over the course of several years, he made a name for himself within the company's finance department and was eventually offered a position in a front office job in the securities trading business.
Of course, ambitious, but good.
He was put on the Delta One desk as a junior trader, where he traded things like equities and ETFs. In his new role, he was paid handsomely, but he had ambitions to grow his position within the company, as well as his take-home compensation.
As I mentioned, ambitious.
Starting just a year after he was put on the trading desks, Kerviel started making certain trades that he was technically not allowed to place. In particular, he put on bigger and bigger...
It all starts with always not allowed to trade, breaching the authority. Always it starts like that. Otherwise, you can't be wrong.
trades that overstep his authority as a junior trader.
Yes.
But for some time, nobody noticed. So throughout 2006, his trades just became bigger and bigger. By 2007, he was placing billion-dollar trades that he would hold for just a few days and then sell them just before a 3-day alert system that would notify...
What? $1 billion trade? Just an individual? That too back in 2000s? I mean, I don't know. I might be guessing wildly, but it's almost like somebody is putting a close to 70 to $100 billion trade now, today.
notify higher-ups that potentially risky positions were being placed. Throughout the later half of 2007, he was net short the market, betting that stocks would go down. Sure enough, credit worried...
Extremely risky, right off the bat. Somebody with billions doing trading, holding for few days and net short. Extremely risky, again, in my opinion. But turns out to be good for him, this short position. We'll see.
And the gradual unfolding of the great financial crisis rewarded his bearish trades. As the markets continued to go down in the second half of 2007, Kerviel was emboldened to put on bigger and bigger bets, eventually placing tens of billions of dollars of SocGen's capital at risk with his trades. He used futures contracts to increase his leverage on his bets. Futures contracts are financial derivatives whereby a trader can get 100% of the exposure to a stock or other underlying security, but not have to put up the capital of actually buying that security. Using these derivatives, he was placing tens of billions of dollars of his company's money at risk, and it was working. By the beginning of 2008, the Dow Jones Industrial Average had fallen nearly 20% from its highs, netting SocGen more than $1 billion in profits due to Kerviel's trading.
Wow, $1 billion in profit. Initially, we heard he was making trade with amount billion or billions. Now the profit become billion. My goodness, it's too much to wrap one's head around.
The only problem was that this was perhaps too much profit. Even Kerviel
Interesting. For too much profit, yeah.
didn't mean to make that much money with his rogue trading. So at some point in early 2008, he tried to dial back his trading profits so as to reduce the attention that he would be getting from the firm's compliance officers. But he had already
So funny. People used to dial up or dial back in order to wrap their losses under the rug. But this guy went long position to dial back profit because he was too much profitable in short position. Interesting.
racked up more than $1 billion in profits on his account, so he placed a few trades to try to bring those profits down slightly. He was bearish on stocks, so he placed long bets on the market, planning to close them once his account's profit had moderated. Unfortunately, the market crash only accelerated in 2008, dropping even more than in 2007.
Now he went belly up. His long position in this deep crash resulted in huge loss. He wants to moderate the loss. He wants to moderate the profit by getting a little loss, but seems like, yeah, this is it. This is it moment for him.
In a single day, the Dow crashed 778 points, the largest point decline in Dow history up until that point. The S&P 500 index dropped 8.8% in a single day, and the Nasdaq fell 9.1%. By the time the smoke had cleared, the total losses to the bank came up to more than $7 billion. This loss was a significant portion of the entire value of the bank at the time, something like 10% of the market cap, along with accelerating credit losses of $3 billion.
My goodness, the company is 10% of market cap in a single trading loss. My goodness.
Was at the same time, the bank was forced to try to raise new outside capital from investors. Kerviel's supervisors were all fired, and Kerviel himself was taken into police custody. After 48 hours of police questioning, Kerviel
Very unfortunate.
was charged with abuse of confidence and illegal access to computers. 2.5 years later, his trial found him guilty of the charges, and he was sentenced to 5 years in prison in order to pay back SocGen $6.7 billion for the trading losses.
Who could pay $6.7 billion? Who could ever in life?
However, that $6.7 billion penalty to an individual was considered to be a joke, and no one, including SocGen itself, ever expected Kerviel to pay back anything.
I think Sam exceeded this. I take back my word. Sam exceeded this kind of amount of, the fraud amount at least. Mr. Sam.
But questions still remained about how the fiasco was even allowed to happen in the first place. Critics of SocGen questioned whether it was even possible for the
Sam Bankman, just to be clear.
bank to have not known about his trading, given the extreme nature of the positions that he put on. Later in 2008,
yeah, that's about it. It's an interesting video. I thought I can share and discuss together. Thanks to Wall Street Millennial for putting up this really interesting, informative video. It's good to know the surprising rise and unfortunate fall. Thanks, everyone, and see you in the next one. Peace.